This is a Sharpe Trade investing and trading podcast. The markets, finance, the economy, and commentary. Nothing within this podcast should be viewed as an investing or trading recommendation. Sharpe Trade is not a registered advisor or advisory service. It does not tell or suggest which security should be bought or sold. The analysts and employees or affiliates of Sharpe Trade LLC may hold positions in the stocks, currency, or industries herein discussed. Sharpe Trade LLC assumes no responsibility or liability for any trading or investing results. Facts, statements, and charts posted to the company website within this podcast may unintentionally include inaccuracies. Content is for educational purposes only, and independent advice should be sought to confirm the validity or accuracy of any claim made. You should ask the firm with which you deal about terms, conditions, and risks of specific markets and the associated obligations that such trading may place upon you. You should always check with your licensed financial advisor and tax advisor to determine the suitability of any investment to your individual circumstances. No assumption should be made in relation to the performance or accuracy of the method shown. No claims are made as to the success or profitability of any statements made. Awkward silences. Don't you just love those when you're in the middle of a conversation? Conversation's just sort of going along, and then the giant silence bubble. Good day, everyone. My name is Dan of Sharpe Trade LLC, and this is a podcast of Sharpe Trade LLC that we sort of put on the front side of the house of what we do. A podcast about investing, a podcast about trading, markets, economies, our thoughts on all of the above. And that's all it is simply our thoughts. You can find this podcast in a number of places. You can find this podcast, first of all, on the public website of Sharpe Trade LLC, which is sharpetrade.com. Obviously, Sharpe, remember, is spelled with an E like Sharpe ratio, so it's SHARPE, trade.com. You can also find it on our podcasting host, which is podbean.com. You can also find us there, Sharpe Trade's Investing and Trading Podcast. You can also find us on iTunes. iTunes? What is iTunes? You can also find us on iTunes. A lot of folks like getting their podcasts through iTunes, so you can also find us on iTunes. And as well, we also take the audio, throw it up, put it on an image, and also throw it up on YouTube. So you can also find these podcasts on YouTube. See, there's another one. Silence bubble. Funny story there. My wife and I had been married, let me think, probably a couple of years. And we were going to a friend of ours' wedding in Ohio. And so we're all dressed to the nines. Let me think. If we'd been married a couple of years, then I would have been 26. Good Lord, it's hard to ever think of a time where I was a 26-year-old. But I was. But anyways, yeah, so we're all dressed to the nines, right? 26 and 24-year-old, and we'd been married a couple of years, and we show up to this wedding, and, Dan pours on, I'll just go ahead and say it, the Dan charisma. We're all having this big conversation. Have you ever had one of those silence bubbles that comes along, like, right at the wrong time and leaves you hanging? They do that in some of these comedy movies, but has that ever actually happened to you? We were talking about all of the concerts we had gone to see, because once upon a time, when I was younger, my God, I was the concert guy. You name a band, I had seen them probably 2 or 3 times, and we're having this conversation. And then, unbeknownst to me, the master of ceremonies is trying to get everyone's attention, right, and quiet the place down. Right at the same time, now mind you, this whole wedding, we're at the wedding reception at this point, right? So the master of ceremonies is trying to get everybody to quiet down. I'm in this big conversation about all the concerts my wife and I are catching, because, ain't I the hip guy? And just at the wedding reception, before we're called to dinner, Just as he's calling everybody's attention and the silence drops and this room is filled, as I was getting ready to say, with people from our various congregations, right at the silence bubble, clear as day, everybody in the room can hear it. Dan gets to say, and this is before they were big, yeah, we saw bare naked ladies and they were fantastic. Oh my God, right in the middle of the room. And everyone, and this is before BNL was like huge, right? I mean, they were in Canada, but not as much in the States. They weren't really playing them in the States, so they weren't that real known. I'm serious, I swear to God. Silence bubble hits, Dan blurts out, the whole room hears it. We saw bare naked ladies and they were fantastic. Yeah, just things that come out at the wrong time. Good times. What was it Phil Hartman used to say? Good times. Good times. Silence bubbles had just come along at just the worst time. Anyways, I was just thinking about that and thinking about the markets. And I've been doing this for a while now. For those of you that do not know, I used to do this by myself. I used to, try to help new retail traders just by myself. That got to be way, way, way too much because it became a business accidentally. I'm not sure how many people realize that. I didn't really start off with the intention of, I'm going to be the trading educator, right? Here's basically a little short history of the way things have gone. And I'm bringing this all up because it's like interaction between traders has just gone deadly, deadly quiet. Everything is just it's like standing at the edge of the Grand Canyon. It's just, the silence is deafening. But anyways, just a little short history lesson. I started trading in 1996. Now, when you were a trader in 1996, and by the way, I sucked, okay? Everybody does when they first start off. I'm fantastic now. Ridiculous, having a absolutely wonderful 2017. And, not to toot my own horn, but ridiculously talented. And far before 2017, some of the lowest drawdown numbers you're going to find on planet Earth. There are, for similar processes, okay? For similar processes, you're not going to find too many people comparing apples to apples with drawdown numbers lower than myself, okay? But when I first started, I stunk. Everybody does. Okay? So, it's 1996. How do you trade? Well, everybody generally had a home computer, but there weren't really any sort of stock or electronic trading via charts. Some people were setting up, and I'm not trying to sound like Grandpa Simpson back in the day or anything. I've got a point to make here. Nobody had, first of all, everything CRT monitors, okay? Not everybody really had a cell phone. They sort of did. We had these brick cell phones, nothing like now. The internet was in its infancy, if at all. It was just barely getting going. And so how did you trade? Well, you got a broker, right? And I started trading futures. That's how I started. I started trading futures, and I traded futures for years before I got into stocks. But you got a broker, and you called that broker on the phone with some whiz-bang strategy that you thought you had, or some idea that you thought you had. Did you hear what I just said? You called the broker on the phone. You had to talk to him. Now, in the earlier days, when I first started, the broker wanted to develop a relationship with you, right? They weren't there to churn your account, or you hope you got a reputable broker. They weren't there to churn your account. They wanted to get to know you, develop a relationship with you. I remember my very first broker. His name was Mark. Heck of a nice guy. But that's part of the business of being a broker back then. You wanted to develop this relationship with your clients, meaning you had to talk to them. Interaction. You had to interact with one another. Second broker I got simultaneously. I had two brokers at the same time for a very specific reason. was actually, you know who it was? It was Ira Epstein. And I think his name was Les. Yeah, I think his name was Les at Ira Epstein. And I still stunk. Man, I would just burn through stuff. I think one day, if I remember correctly, I think this was 96. I can't remember. But I remember one day, and I can only laugh looking back at it now, but they were raising the interest rates, and I had this bottom pattern thing that I wanted to go long gold. And I remember Les, like, they were announcing, it was like pretty much baked in higher interest rates. Les was like, really? I mean, seriously, like, I mean, a broker typically really shouldn't try to talk you out of a trade, but I remember him trying to talk me out of this trade to an incredible degree because they were raising the interest rates, gold's falling, right? No, I got this bottom pattern. And yeah, I lost on the trade. Should have listened to Les. But anyways, that all required interaction. Now, I'm calling guys that are talking to folks that are in the pits in Chicago because this is futures, right? When I first started, I hate people complaining about commissions nowadays. I really hate to hear even the complaint. Well, I can't do that because of commissions. Shut up and go away. Just shut up, close your mouth, and walk away from me right now. Because if you stay in front of me, I'm probably going to punch you in the face. No, seriously. Don't complain to me about commissions. When I first started trading futures, now mind you, per tick, the value's, a lot higher. But commissions were like $50 in, $50 out. If there was no internet, there's no day trading, there's no going in for a scalp. The only people that could go in for a scalp were guys in the trading pit. You couldn't do it. I guess you could send a broker down to the pit or somebody into the pit from the broker's office to try and get you best, but they're not going to do that, right? The only guys scalping, the only guys getting ticks are sitting in the pits. They paid a ridiculous amount of money to be able to be there, and they paid for that advantage of being that close to the market. Just the same way HFT pays a ridiculous amount of money to be that close, right, to the market being made. Same thing back then. I mean, you have to pay for that advantage. So what do the rest of us do? Everybody has to back up their time frame, and you play on a larger time frame. So you have to play for days at a time. So commissions were $50 in, $50 out, right? Now I'm saying this for a very specific reason. It's not just going down memory lane with Dan. Some middle-aged guy talking about back in the day of trading. That's not the point. The point is I had to talk to those guys. I got to know Mark. Mark was a heck of a nice guy. Brokerage out in Oregon, actually. So Mark was just more of a full-service brokerage. I got to know him. He got to know me. He really wanted me to get into spreading futures. I should have listened to Mark as well, but I was new, so I sucked, and I suffered from the Dunning-Kruger effect, just like everybody else does when they first begin. And, yeah, I mean, so I didn't listen. But I got to know Mark, and Mark would tell me different things about the business. I'm interacting with him, right? I got that second brokerage in Chicago at Ira Epstein with Les. Les was the guy I always talked to. And although I still stunk in 1997, I got to know him. And he was closer to the floor, and he would tell me about things going on, in the pits. I got to learn that way. I got to learn through interaction. I had Mark telling me about spreading futures. Now, what does that do to my mind? The first thing it did to me is like, spreading futures? What's that? Well, your margins can be ridiculously lowered from $3,000 margins down to like $500. What? Spreading? Like, why do they do that, right? And you would have to explain spreading. And I got to learn through interaction. That's my point. Ira Epstein's 1997, 1998, trading for a couple of years now. That's 2 years of interacting with people that, they were only brokers. They weren't, Mark traded. Mark spread futures, and he swore by it. He's like, I'm a broker as well as I spread futures, and I recommend that to everybody. And like I said, I should have listened to him. But anyways, by the way, I heard somebody recently talking about, well, this is statistical arbitrage of futures. And when I watched, I was like, that's not statistical arbitrage of futures. That's spreading. There's a difference. Anyways, yeah, I should have listened to Mark. I should have gotten in spreading much, much sooner and looked at correlative relationships, which now is like the backbone of much of what I do. But anyways, yeah, I had to talk with them. I had to learn these things through talking with them. Now I was talking about commissions. Let's progress things a little bit here. Remember, the internet's in its infancy. Nobody really has these electronic platforms like we have now, like Tom Sosnoff, built Tasty Trade, and now he's with Tasty Works, which I'm test driving that one, by the way. But we didn't have any of that. There were guys in the pits. You had your phone, and you called people up and you talked to them and you said, hey, this is what I want my order for. And they charged you $50 when the order was executed. And then you didn't know what the market was. Nobody knew what the market was. So you would have to call your broker and talk about what's going on in the market. And that was their job. Well, as things progressed, it was, the pits are getting very active as more and more people are getting involved in trading futures. And there's more interaction. More people are talking about trading commodity futures. And some brokers had the idea of what we're going to do is we're going to put what we call a discount desk. We're going to get these discount desks that people at home in Michigan and Texas and Oregon and everywhere else, they can call to get their orders executed, and we're going to lower the commissions. Now, there's not going to be as much chit-chat. Don't call them up. These people are not there to build a relationship with you. But what we're going to do is we're going to have this discount desk. It's going to actually be not in the pit, obviously, but on the floor. And they would send out these little diagram maps, and it would be a map of the trading floor and where each pit was located and where their desk was located. Again, the competitive advantage of distance to the actual market, the actual mark being made. Bid, offer, mark, reshuffle. Bid, offer, mark, reshuffle. So they would send you these diagrams, and it was like, okay, over there's the corn pit, and over there's the wheat pit, and over there's oats, and our desk, and they would highlight it. Our desk is right here. So when you call into that desk, you have to say, I want to buy I want to buy July corn at 3:30 stop. They would repeat the order back to you, and that was it. That was all the talking that you were supposed to do to the discount desk. And for that, we're not going to charge you $50. Now, we're only going to charge you $30. What? $30? How $30 in, $30 out? How can you not make money with commissions that cheap? How can you not make money? Right? So that's why I don't like people complaining to me about commissions. I mean, you have to figure in commissions. I'm not saying that you don't have to figure in, but give me a break. When I started, good God, commissions are just so much higher than they are now. And I am looking to get my commissions cheaper and cheaper and cheaper and cheaper. My commissions are very low at the moment, but I'll get them cheaper if I can. Right? I'm not saying I don't care. I'm just saying don't whine and moan that you can't trade because of commissions, because that's just dumb. But anyways, yeah, so you had this discount desk. You were not supposed to chatter with them. You were supposed to do your own analysis. You call down, you get that desk, you say, this is, Dan, account number. And they even, when they sent you that diagram of how close this desk was to the pit and they could get you filled real quick, they had instructions like, say, my name is your account number, and then the exact order. And you had to know the order types. If you said a stop order at 3:30 and you meant stop limit, that's on you. It's not on the desk. You have to know how to phrase your orders. They would repeat it back to you, then they would hang up the phone and they would take off and run your order, right? Now, you were not supposed to interact with them, but as time went on and the competition started for lower and lower commissions, $20. It's like, what, $20? Are you kidding? The rules sort of loosened up a bit. People, you did start chatting with the guys on the desk, okay? Because what was starting to happen is electronic trading was starting to be discussed. May I say, there were some big names in Chicago that were very opposed to this idea. because it disrupted everything that was going on, right? And there was some sweet money being made in those pits. But around 2001 specifically, I got into more investing on longer term on stocks myself, self-directed. And you had things like Scottrade and these other stocks. So this is not Chicago. This is out in New York. You had these brokerages saying, you can do a chart on your computer on your big 21-inch CRT monitor that you're so proud of. That thing is so huge. You can put your charts on it, and it doesn't have to be in an Excel program. Like, we'll send you data. What? This is crazy talk. And we're only going to charge you $10. Okay, now things have gotten nuts, right? Things have gotten crazy. Commissions all the way down to $10. But see, here's the problem. You have guys out in New York offering feeds, but not level 2. You got to pay more for that. I hear people today say things like, I'm not sure if my broker provides level 2. And it's like, you don't have to worry about it, okay? But anyway, circling back around, there was less interaction, right? I could open a Scottrade account or an E-Trade account, or I don't know when E-Trade came along, but I could open a Scottrade account or a ShareBuilder account when that came along. ShareBuilder was awesome. They were their own company. They weren't owned by anyone. Everything was green, right? That was I still remember their logos and everything. They weren't owned by ING or Capital One or anybody else. They were just their own thing. But it was all electronic. You could open a ShareBuilder account with $0, start funding it, and look at very basic data. And you didn't have to talk to a soul. Now, at first, we all thought, this is fantastic. But what this is creating over in Chicago is everybody knew for many, many years there was this unstated thing with trading futures that it's like, it's coming here. We're not going to be able to stop it. And that was said for years and years and years. And let me tell you, the institutions in Chicago were all insanely hesitant to adopt it because it disrupted their business in such a major way. But eventually, electronic trading, there's the very famous documentary, has very rough language in it because it has traders in it, and traders speak in a very rough way, but floored, right? For you folks that are new, if you've not seen that, it's a documentary about trading the pits in Chicago, and it takes a look at the very end of that era that I'm talking about. And see, let's back up just a little bit. As that's progressing, right? So as time is passing and everybody in Chicago is saying, yeah, it's coming and we're not going to be able to stop it. They were very hesitant, but things like more and more businesses getting drawn away from the floor and the actual trading pits and the old way of doing things, the way I described to you in 1996. And it's going more electronic, which means when I would call people in Chicago, it didn't matter if it was a discount desk. Everybody had all sorts of time. Things were not as packed and busy. It wasn't like, yes, what's your name, what's your account number, what's your order, goodbye, click. They didn't even say goodbye. They were like, that's your order? Yes, click. And they would go run your order. All of a sudden, people had time. I had time to talk with Scott. Scott was a guy I got to know that worked on the floor of the Chicago Board of Trade, right? I got to know Scott, Adam, several other guys. I haven't talked to them since then. But my point is, as things are going more electronic, I talk to them. I'm talking to people in the business. Just like when I first began with Mark, and Mark's trying to get me into spreading futures and all of that, and I wanted to stay directional. It doesn't matter. We were talking to one another. There were discussions. And everybody kept going electronic because I heard Rob over at DTG say this one time, why wouldn't you go electronic? Why wouldn't you sit in your home and trade rather than, get in your car and drive down to the exchange and do all of that? Why wouldn't you do it all electronically? Who doesn't want to be at home? And it just happened more and more. And then the rest of us who've been at home the entire time are like, this is fantastic. I got 3 monitors and I got charts. And oh my God, I never dreamed of this 20 years ago. It's just happening more and more and more. And there's less and less interaction. Until one day I woke up in 2006 and realized I don't talk to anybody anymore about trading, something I love doing. One giant silence bubble. I mean, there's nobody to talk to. And I still remember, it was like 2005, 2006, and it was just like all of a sudden somebody shut off a light, and I wasn't talking to any traders because I didn't need to. And at first it's like, oh, this is fantastic. And I remember the days when I had to call up Mark, and oh my God, and the commissions are lower. But I'm not talking to anybody. I'm going to tell you, you get a little rusty when you're not talking to anybody. Thankfully, in 2005, 2006, it was sort of a, especially in stocks, a very, very, very easy market, right? It was just, I hate to say easy. I hate to use that word because trading's never easy. When like times like right now, our core program's a little bit leveraged, and it's very bullish, right? It's very bullish at the moment. You could say that's easy, but it's just like you're sitting there thinking, oh my God, why didn't I leverage it a little bit more? Right? You're always uncomfortable. So I'm not saying you're going to be, it's ever easy. I'm not saying that, but it's just like, it's one of those time periods where you just sit back, lean back, and watch it go. A lot of new traders don't know how to do that, by the way. They don't know how to just let it go. But just silence. That's why I started. Actually, it was Microsoft had this thing where it was like a live blog, live journal, something like that you could do. That's actually what I started. I didn't want to get into trading education at all. So I was like, I need to talk to somebody because I am going crazy. I am going absolutely stir crazy. Because the business of trading, and especially sort of with what I do, I mean, I take scalps now. I'm doing some stuff in futures. But a lot of what I do, I mean, so yeah, there's stuff that lasts, I don't know, less than a minute. The bulk of what I do is like from 1 day to like 30 days. And then that's the majority of what I do. And then there's other stuff. Well, when you're playing from like the periodicity of like I put on a trade Friday, right? I went long one particular instrument. We're not going to talk about that one publicly because I give away too much publicly, but I got long one instrument. Shut up nice too. It shut up like 5%. But I may be in that thing for 18 days. There's not a lot to do for 18 days. I don't know. I may be in it for longer. I may be in it for shorter. But I'm just saying that's the average. I can always look at my average time in a trade. That's one of the things. If you go to the money management and we talk about, you can build your own spreadsheet, although you can get software that journals all of your trades for you, which, may I say, fantastic pieces of software. But I'm still doing it old school. I'm still doing it, via the spreadsheet. But one of the things, and we talked about in money management playlist, looking at your iteration of trades, for short-term trades. Let me see here. No, that's not it. I'm on that spreadsheet right at the moment. Here it is. My average time in these trades is 18.89 days. Okay, so when you look at all of them, I talk about, like, one of the things I record is how long I was in the trade, and then I take the average of that. So I'm going to be in this one particular trade. On average, I'm in it 18.89 days. There's not a lot going on for 18.89 days. As a matter of fact, I had to wait almost a month for this trade to line up. I've been talking about it for a month. Finally got what I wanted to see happen, pulled the trigger. I don't need to interact with anybody to do that. So again, we're back to the big giant silence bubble, right? I learned long ago by talking with Mark. Now, I know this is a point that Danny of Mr. Top Step has made, and I know this is a point that Rob and NJ of DTG have made over and over again, and I've made it a couple of times. But the way I learned was by interacting. I'm just going to highlight what they've already said, but I've learned that in my own experience as well. Talking with Mark, talking with Les, talking with Scott, talking with Adam, talking with all of the guys in the Chicago, in Chicago, I should say. That's how I got to know what I know. I didn't come out of the womb knowing about spreading or spreads or, how exchanges work. I didn't come out of the womb knowing that. I talked to the guys that were actually there, developed the relationships with them over years. That's how I learned. That's my point. That's how I learned. And going back to what I was saying in the beginning, you know how I fell into trading education? Is I was looking for people online to interact with about trading. Because there's just nobody. One giant silence bubble. It's like, wait a minute, Dan, there's tons of trading groups out there, right? There were tons of trading groups out there and trading communities. It was like, okay, this is how we're going to interact. All right, this is cool. All right, I can do this. And again, who wouldn't want to, right? If I can have access to the same level of talent that I had to before, and I can just do it online and we're all in a group, oh, this is awesome. There was only one major problem I came to discover quite quickly. Electronic trading had opened up the arena to basically the world, anyone with an internet connection. TCP/IP, you can trade. So now the problem was everybody else starts trading and they're suffering from the Dunning-Kruger effect because they're just getting started. And I had access to all of this talent, the guys actually slinging the paper in the pits for like 12 years. And these weren't the guys I was interacting with in these trading groups. It was a bunch of 2-bit hacks. Now, my trading wasn't the best at the time, but I was consistently profitable. And I'm just quickly realizing these people have no idea what they're talking about. None. Just harebrained conspiracy theories. And I'm just sitting there thinking like, no. That's not the way that market works. My God, I talk to the guys on the actual floor of the exchange all the time. That's not the way that works. Are you insane? And at the same time, I would run across new traders who were curious as to the way I was trading. And so we had this Microsoft, as I was saying before, we had this Microsoft Live journal thing, right? And so I would journal my trades. I would talk about my trading strategy at the time. I outlined the whole thing. And, there was a little interaction. But I thought, I don't know what happened then. What happened next was I ran across Blogspot. I think Google or somebody was getting known this new medium that everybody was starting to use called Blogspot. You could start this blog, and I thought, well, crap, I've got a ton of information over on the Live Journal, but this Blogspot is just so much more user-friendly. It's just so much more intuitive, so much more seamless to do actual entries that I debated for about 3 months, and then I tried to do them both at the same time, and then I said, screw it, I'm going to jump over to Blogspot. And at the same time I jumped over to Blogspot, about a month after that, I realized people are doing YouTube videos. I saw this guy, his name's Kenny. And Kenny, I did get your email. I have not ignored you. You wouldn't believe the things I got on my plate. I'm going to give you a call when I get a second here. But we are going to get together, okay? But anyways, I saw this crazy guy, Jefferson. Back then it wasn't Kenny, it was Jefferson. And it was like trading comedy. I was crying, I was laughing so hard because he was putting this sort of in this comedic spin on YouTube, the angst that many traders feel, only he was like inflating it, right? And it was absolutely tremendous. I mean, it was gold, Jerry, gold. So I thought, well, why not start my own YouTube channel, right? None of this was with the idea. None of this was with the idea of getting into trading education. What I'm trying to describe to you is how I sort of accidentally fell into trading education. It was just this organic process of, by God, I need someone to interact with. I'm going stir crazy over here. I mean, those were the two things going on. And those are two concepts that I'm really trying to highlight. I think the first point is not really the main point, but I do want to highlight I did not start off to like somehow get into the trading education space. I just sort of fell into it. The main point is I was trying to interact with people and have tried to interact with people because I realized the tremendous benefits that come out of interacting with others. I've been trying to do that for 10 years. And then I sort of accidentally fell into trading education. I found out that YouTube has this thing called playlists. And I had still all of these ones that I was new folks that I was interacting with, completely new to trading. It was like, well, how does this work? And how does that work? And how does this work? And how does that work? And I was answering the same question over and over again. I was like, well, I'll just make these playlists, answer the question, and then I don't have to revisit the question. I can just say, that playlist, right over there, right? And we could just continue to talk about markets and stuff and things that we found interesting. And that sort of evolved into sort of trading education. What's fascinating is by sheer synchronicity, we have arrived at 2008. And the things I'm hearing from guys in New York are really bad. Like really, really bad at the end of 2007. And it's sounding similar to, I would say, like 2000, 2001. And I wasn't convinced we were in for a bear market yet. And there was an entry I made in January of 2007 where I was like, I don't know. We could have a bear market. No, it's like some of the stuff I'm hearing is not good from major firms. And guys working at major firms. Which was me interacting with them. Okay? And then probably by March, and looking what the credit markets were doing, and hearing more that was coming out of New York, I was like, nope, we're in for a big one. And the markets had rallied a little bit. They in the spring, they started to rally, and I'm like, no, this is not a prediction. You look at the yield curve, you look at everything else, you look at like I said, look at the credit markets. Told that people all the time, look at the credit markets, look at the yield curve. What's going on with the spreads? Look at what's going on with this thing is going to blow up back. Now, everybody else was interested in it, right? And just through this natural course of evolution, of just the way things had organically grown, everybody in the universe was interested in the financial markets in 2008. And I had already built this thing, quite accidentally, just wanting to interact with people. I always said for years, more than anything else, it was just a journal. It was just an attempt for me to interact with other people, other real traders. But everybody had all these questions about what's going on in the economy. So I gave my thoughts. I gave my 2 cents. And it was just sort of this organic way of just falling into, quite honestly, trading education. That's the way it sort of came about. And I sort of liked teaching. I enjoy it at my heart and at my core in many ways. I am a teacher. Did it on my own for a while and interacted with a lot of new folks who wanted to learn trading. And by the way, this entire time, the markets are rallying and rallying and rallying, and all of these doom guys are saying, no, it's going to fall apart. We're not out of the crisis yet. And it's rallying and rallying and rallying. So people are still interested, right? And the markets continue to rally. I was doing all of that on my own, and it sort of education stuff, and it got to be too much. I mean, taxes and accounting and customer service and replying to emails and creating the content. And oh yeah, by the way, trading too, and website design and all that stuff. It was just way too much for one guy. So Sharpe Trade LLC was formed, which for you folks that are new and don't really know what Sharpe Trade LLC is, we have the private stake of just the managing partners of Sharpe Trade. I'm basically in charge of trading that myself, and we trade that. Okay? And then, as well, because all the guys were like, God, we could do what you've done, Dan, with the trading education stuff and just put it out there and put it on the front side of the house and have it there, right? Because you're the real deal. We've watched you. We've looked over your records. We've seen you do it live. You trade this private stake. We'll have the trading education material out there, and then we'll just be comfortable. Okay? Why am I talking about all of this? Why the history lesson? Well, as I said, I've sort of accidentally fallen into the trader education space. But we had a text entry some time ago, and we said this before, and I'm going to say it again. We're self-sufficient. Sharpe Trade LLC, I mean. So when you go to the Sharpe Trade LLC, you see the education series, right? 3 free courses. Completely free. How to begin with investing and trading. Money management for investing and trading, which is the mathematics, having optimal math over an iteration of trades. And risk, discussions of risk and trading. Specifically short-term trading. And then trading psychology and emotional discipline. Those are 3 free courses. Completely free. We have a Sharpe income project, right? There's a difference between just trading an account and trading it up and having something for income. So for free, we just decided, we're going to start this little live project, and it's going to be this little live portfolio, and you're going to see it tracked out all the moves week by week by week, and the decisions, see how it plays out. If it's great, then you let it go. If not, you do something about it. And I'm going to announce all the moves before we make them, like we did last week, right? We bought some instruments, some ETFs. We said, okay, for the Sharpe income project, for the cash that's there that we've shown you live, for this little project we did, start off with $5,000. It's now over $4,000. We're going to show it, right? We said before we even put the entry up, before the market even opened up. And then we talk about it when we hold it, which is typically for 30 to 90 days. And then we talk about when we exit. Right? Free. Completely free. But we also have premium courses. Right? We have a valuation investing course. There's one video entry I want to put in there. I want to insert into that one. We have our short-term trading course, which I think is the single best priced trading course available on the net today that is also the most comprehensive. It's not one trading strategy. There's like 1, 2, 3, 4. Oh man, there's way more than that. There's so many strategies, but then there's variations of these strategies. And here, as if you tweak this, notice this variation will give you something completely and totally different in the results. And there's a supplemental section on the forums. It's almost larger than the kernel of the short-term trading course on the website itself. I mean, it literally, it's trading theory. It's how markets work. It's not one strategy. It's not like, here's how you trade penny stocks. No. It's multiple strategies. The whole theory behind building a really good-looking short-term trading portfolio. My point is, you may look at all of that stuff, come on to Sharpe Trade and think, oh, this is a trading education company. All right, that's what they do. As we said a couple of weeks ago, we're self-sufficient. We got our stuff. We're having a fantastic year. Sharpe Trade LLC as a company, like other companies do, has an investment portfolio. I'm the manager. I'm the head cheese guy in charge of that, right? We're fine. We don't need to do anything else. But we also, something else we put out these podcasts. You're listening to it right now. Some of this is just an attempt to get traders talking with each other. Because, let me tell you, there's a giant silence bubble. Again, amongst traders, even online. Just nothing. Nobody's talking about anything. It's like, did I break it? Did I break discussions? Because some of our strategies, we call them, you could get hit by a bus strategy. In other words, you put this, we call it the beginning strategy. That's just the first one we cover. You put this beginning strategy on, by God, you could get hit by a bus, go into a coma, wake up 3 years later, and it's never had a 3-year period where it didn't make money. That's why we call it, you could get hit by a bus strategy. It's the very first one. We call it the beginning strategy. And it kicks out competitive performance. So did we show people this stuff and did we break it somehow? Did we do too good of a job? But it's not just Sharpe Trade. It's not just people aren't interacting in the comments section or on the videos or anything. I'm talking to other trading educators. I'm talking to other professional traders that reach out and help others. Somebody mentioned this. They work out at a fixed income firm out in California. They've all mentioned the same thing. So I'm talking professional institutions down to us, down to everything. It's just gone like deadly quiet. Like, nobody's talking trading. Like, what's going on? Like seriously, did we break it or something? Putting out too much good information? That's a little bit of ego. I'm being somewhat flippant there. Okay. But seriously, like, nobody's interacting the way they once did in trading, and it's sort of weird. And it's not just, as I said, it's not just Sharpe Trade. I'm talking to people. I mentioned this with a group of DTG. This is one of the reasons I love DTG. A little story about DTG. The way DTG, blah, 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 blah. NJ and Rob over at DTG are sort of the original gangsters of order flow trading in futures, right? And I mentioned this to the group recently because it's trading interaction, right? I used to, as I've said earlier in this podcast, I used to trade futures. And for those of you that have seen me for years and years will remember an entry I had where I talked about reading the tape. Well, I got away from it because some changes were made in the way the technology worked and feeding traders, the actual feed of the tape. And I had like 20 other strategies I could use, so I just sort of drifted. I'm not going to get into the whole story here because this whole podcast has been a giant story time. But I just drifted over to some other things, and I wasn't trading futures as much anymore. Right? And I tell other people this all the time. I say, don't overcomplicate things. Don't overcomplicate things. Don't overcomplicate your trading strategy. Markets are complex, but don't complicate your trading strategies. Don't do it. Well, sometimes I need to say those things out loud for myself. When I talk about traders interacting, it helps keep you sharp because sometimes you say things out loud that you should, it's a reminder to myself as well. As I said, there used to be an entry out there, and some of you may remember it, of a video entry where young Dan, as I said, 10 years ago, is talking about reading the tape in futures. Well, protocols were changed in how things came down in time and sales. They no longer showed, and I'm not sure if everyone knows that. But I think was that 2009 or 2010 where they changed the protocols, and it was to make things supposedly more transparent. But if somebody was unloading a 2,500 lot order on the markets, you no longer saw it show up as 2,500 in order to make it more transparent. Basically, see, here I am telling you the story. They would show you how that 2,500 got split up. Well, if you're looking at time and sales, you're not seeing 2,500 anymore. So you can't mentally take note of that and see, okay, that got parked right along here. I don't know if it's long or short, but relatively speaking today, okay, that's something to take note of. But it was changed. And so markets are always changing. We've said that before. So it was like, well, crap, what do I do now? Well, I found out about it because there's this guy down in Florida that talked about it. And he talked about, okay, it was to make things more transparent because now you see every single block. You don't see 2,500. You see it just completely deaggregated into every single block of how it's getting matched up, which sucks if you're an actual trader. And he was like, so I contacted several people to see about how I can get it reconstructed back to the way it used to be, so I could see, time and sales and everything the old way. And when I look at the dome, it made reading the tape a lot easier. There's only one problem. I couldn't stand this guy. So I could either get a hold of him to talk to him to see what he was doing about reconstructing it or not. And when I say I don't get along, this is one of these people that I basically I burned the bridge, and I'm still glad I burned the bridge. This guy down in Florida that was talking about predictions for where the market was going to be in 5 years because of Obama, and it was going to be in the. By the way, he was wrong, dead wrong, wildly wrong. But anyways, I had this public entry where I discussed the entire interaction I had with him because I said, hey, I don't, we're both traders. You're a really smart guy, really great Fed watcher. Can you really model things out 4 years considering all of the multivariate nonlinear inputs that are going to be coming in? And we don't even know, with what we do know, we don't even know the way that's going to play out. For that, he called me a douchebag and called me stupid. At which point, Dan's clause came out. And I had this entry that I'm basically going short this guy's status. Like, and by the way, if you put in his name on Google Trends, I wish I could have made money on that short because it was a fantastic short. I mean, I literally eviscerated for months on end every word that came out of his mouth. I was just like, didn't start the fight. But anyways, we tend not to get along is the point. At one point, this guy's temper, you think my temper is bad? This guy's temper was so bad, he had like 3,000 people on his forums or something. He threw a hissy fit because people were asking him questions, and he blocked everybody on his own forum and then went on a tirade for a while. He blocked everybody so they couldn't post a response and went on his own little tirade. What a D-bag.
He's a real douche.
I mean, that's the thing. Like, can you even interact with him? Or is he going to go on one of these little hissy fits where he just literally blocks 3,000 people and then lectures them? I mean, but he's been wrong about everything. He said the market, this is how poor his understanding was of market mechanics, as he said, that high-frequency traders were bidding the market up, and that's the only reason he was wrong, and the market should have collapsed. It was like, but anyways, can you even interact with a guy like that to see how he reconstructed time and sales? Plus, I had like 14 other strategies that made money. Some of them were get hit by a bus strategies. Very, very little effort. Very high return on effort. Very high return on effort. So I began to perfect sort of those strategies. Now, this has all been to talk about DTG a little bit. DTG sort of brought me full circle, right? Because I'm always telling people, hey, don't overcomplicate things. Don't overcomplicate things. Don't overcomplicate things. DTG, when it came to trading futures and the tape, sort of helped me remember, like, Dan, you overcomplicated what was going on in futures. You overcomplicated the entire thing. Think about it. And I'm not going to get into what DTG highlights. I let them do that. Plus, I'm just not going to get into their bag, right? But what I'm saying is, when I looked at just the principles they highlight when it comes to intraday trading, futures, and order flow, and the base principles they just pound over and over and over and over again, it helped me realize I overcomplicated everything that was going on simply because those protocols were changed on the tape and the way it came through, and the lots came through. I overcomplicated that whole thing. And even though I knew all of the principles, I knew every one of those principles, but interacting with other real professional traders reminded me of that. And I've been trading futures a little more lately, which I may say I've enjoyed it quite a bit. But it took that interaction, a 10-year circle, to rediscover something I should have known back in 2009. But no human can know it all, and sometimes you have to interact with someone else. So when I think of DTG, it's not this place to go for trading education or anything else. You have to have a place where actual honest-to-God traders are talking. You have to interact. I'm not saying spell out all your strategies and everything. Sometimes just talking out loud about the things everybody's seen. And these accidental little comments are made, and you sort of go, huh, what? Right? That interaction. And Rob said this over at DTG, and I'm going to reiterate it here. Communication. From the time we are like 3 years old and we grow up, communication is how we get smart. It's how we gain intelligence, is through communication. So communication is how we get smart, and it's how we stay smart. Stay smart. You have to interact. Or I will say it's incredibly advantageous and profitable to interact. So someone there works at an institution had mentioned the same thing. This isn't trading education. This isn't a trading educator. It's nothing like Sharpe Trade. But somebody else that worked at an institution said, we've noticed the exact same thing. It's like this gigantic quiet everywhere when it comes to the financial markets. Now, I like quiet markets, but I want traders to be talking, and it's just like, everybody I talk to have said it's gotten weird quiet. Now, I have my thoughts as to why that's happened. We've been on a tremendous bull run for, 8 years now, something like that. And the markets just go higher and higher and higher and higher. And so that's one reason, I think. I mean, from March of 2009, the markets have been doing nothing but rallying. And that tends to make people complacent. Very complacent. Again, on Friday, the VIX printed in the 9s. I mean, some of that's just the markets we're in. Just these markets just chugging higher and higher and higher and higher and higher and higher and higher, and everybody just tends to go to sleep. You see it reflected in current thoughts on volatility when you look at the VIX. 9, where's it at right now? It settled at 10.02. Got down to 9.8s on Friday. I think that's some of why this quiet has happened. It's just the markets themselves and this tremendous, because I'll tell you, when there's like a 8% sell-off or something in the markets, we can go in and look at the data on our sites for the hits for our site when those sell-offs happen, and it always spikes. So do you see what we're saying? We have all of this content, free content, everybody can peruse, podcasts like this one, everybody can peruse it. And there's tools we have that notices the traffic on everything. And whenever we have the market rally, the traffic tends to die off. Whenever we have markets that start sinking, 3%, 4%, 5%, traffic heads right back up. It's as clear a correlation as night and day. Bread and butter. That's probably a better. But it's as clear as day. Traffic goes up when the market sells off. Market rallies, traffic dies off. Clear as day. So I think some of it's just the market. Some of it I think is technology, and that it is so easy to trade nowadays. Execute trades is what I mean. Execute trades. Okay? It's easy to execute trades. At the same time, trading education's come a long way. It's a lot easier for people to spot nonsense that are brand new to the markets. It's a lot easier for them to spot, because we're not the only ones that are actual honest-to-God professionals managing real money for like private stake, private company or individuals. We're not the only ones that are talking publicly. We're not the only ones, okay? We've mentioned ones like Tom and Tony of Tasty Trade, right? The real deal. Guys have seen way more history in the markets than I have. I agree with much of what Tom says, not everything, but a great deal. I would say like 93%. But I think if new traders get involved in options and put on, I'll say one of the things I disagree with, put on like 50 trades, they're just going to get overwhelmed, and then when things go awry, they're not going to know how to prune a portfolio very well. But, the real deal is what I'm saying. So with ones like they're out there that have a much bigger footprint than we do, we're out there. There's a couple of other guys out there that are the real deal. Talking, at least. I'm not even saying they're in the trading education space, but they are talking. And I don't care what Tom and Tony say. They are trading educators. They are. They may not say, oh, no, no, yes, you are. We're going to have this whole bit where we describe this strategy and that strategy. We're going to talk with yes, you are. You're in the trading education space. Sorry, but you are. You can try and call it anything you want. No, technically what we're doing is we're painting the arena of knowledge. Okay, call it what you want. You're a trading educator. But anyways, it makes it better for new people. It's so much easier to spot nonsense. So I think that contributes to the great quiet. Well, I don't need to talk as much. And I'm not saying everybody needs to be educating. I'm just saying interacting. You know? One thing, there's a trading group I contribute to that's not with Sharpe Trade. We don't get into our processes or anything. Okay, so we don't talk about our strategies. One trader comes along, and he's really grinding it out. I really appreciate it. And every morning he puts up like a snapshot of like what's gone on overnight. And I appreciate it. Sometimes I say something, sometimes I don't, but I appreciate it, right? I always like give it a +1 or something because it's like, I'll tell you, I have my own routine I go through in the morning. Markets, I look at these. Sharpe report clients know that. What my exact process is. Heck, each morning I mail it out to them, or most mornings I mail it out to them. So I have my process, but I overlook his as well. And sometimes I'll say something and we interact. It's not on strategy. It's just, by God, talk to one another. Because I'm going to tell you, when these markets rally like this, because I have seen a bit, okay? I've seen a few things in the markets. Everybody gets complacent. It's dangerous. I'm just saying, that's when they break loose. Markets take what's it? They take the staircase up and the elevator down, as the old saying goes. They move quick. Don't let it make you complacent. And you don't have to talk about your strategy, though most people don't care. But I'm telling you, traders need to be interacting more. Okay? Not about proving how great you are, because nobody cares, really. Nobody cares how great I am, and I've got literally, people see it. I have some of the lowest drawdown numbers on planet Earth. And nobody cares about that. Nobody really cares. So nobody cares about your great call. You got one call correct. Nobody cares. But that's not interaction. You know, actually interact the way real traders interact. That's why I appreciate being in DTG so much. People interacting. Right? So I'm just saying, much of me even doing this podcast is just an attempt to interact, and you just get quiet. Or you get people that suffer from the Dunning-Kruger effect that want to somehow teach me. Not a client or anything. Somebody else did this recently. They wanted to teach me that predictions are possible. I'm not interested. Okay? I'm not interested that you're going to show me because, and this was absolutely hilarious. He said, see, I use technical analysis and I use this technical tool and this particular whatever it was, he may even use some of those same models I do. Not technical analysis, I'm saying models for getting involved in one instrument. And I bought it, and now it's up. And therefore, the prediction was correct, so predictions are possible. Oh, God, I'm not here to debate with you, and you are not going to teach me, okay? That's not even a point that's debatable. I've said it in the past. That's science. That's complexity mathematics. You looked at something that you think gives you an edge for probabilities. That's much different than prediction. So I'm also saying, don't come to me that you're going to teach me something, okay? I may learn. That's something completely different. Through actual honest-to-God trader interaction. Like just interacting with DTG and seeing principles that they stress over and over and over and over again. That interaction, I had to take it for myself. Nobody can turn you into a trader. Nobody can teach you anything. Everybody has to think about what they're going to personally accept. Here's my statement. Do you accept it or not? Here's DTG's statement. Do you accept it or not? You know? But them just stating these principles for order flow trading and futures, and I accepted and I just listened, and then it was like, wow, it took me 10 years to rediscover something I had known all along. But it was that interaction, and it was something I accepted listening to. Do you see what we're saying? I'm just saying, nobody cares about your single binary trade predictions. Nobody cares. Nobody cares about mine, and I'm ridiculously talented. Okay? Nobody cares. That's not trading anyways. That's not trading interaction. I'm just saying interact, for God's sakes. Talk about the great quiet. Talk about how complacent it is. Talk about, it gets a little monotonous after a while, but trading's monotonous. We're just saying interact. Okay? And the whole reason I'm talking into this microphone at the moment is an attempt to interact, to offer thoughts, because communication is how we get smart and stay smart. And this great quiet, it ain't helping anyone. The other factor I think that's contributing to it is society, because of just socialistic tendencies, is becoming more and more and more and more lazy. I see these memes where people are highlighting laziness as this funny, cute thing. I don't like laziness. And it's not funny and it's not cute. Do you know how they punish people in prison? You don't get to work anymore. You're not going to work. You're just going to sit and do nothing. So some of it, I think, is just because of socialistic tendencies of society as a whole that's been ongoing for 30 years. I think it's tended to make people lazy. So, anyways, that's just our thoughts. We're not going to highlight everything that Sharpe Trade offers because we did that earlier in this podcast. We are going to tell you about one thing, though. Okay, for those of you that have made it to the end of this podcast, we do have something coming in July. Okay, there's a few things coming in July. The managing partners of the firm met, and we had a few things to talk about. We're self-sufficient, quite frankly. We're good. We got our portfolio. It is rocking. And we're self-sufficient. Take it or leave it, quite honestly. But because we are self-sufficient, it is the summertime, and the Great Quiet's been ongoing for some time now. And things will even sometimes get even more quiet in the summertime in the markets. We thought we're going to do a few things in July. A few things. Not just one, like, we've had this before, but a few things. And I'll also say this. We think you Sharpe Report clients will be happy with it. That's all we're saying for now. It will be coming out in July. A few things will be changed in July with Sharpe Trade. And that's all we're saying for now. That's all we're going to say about it. You'll have to stay tuned. July is what? This is the 24th, so it's only like 7 or 8 days away or something like that. 6, 7 days. Anyways, regardless, it's only a few days away. For right now, we're just going to say a few changes are being made, and we think especially Sharpe Report clients will like it. But if you've been eyeing up Sharpe Trade, we think you're going to like it too. Folks that followed me from years ago, years and years and years ago, we think you're going to enjoy it. But that's July, not right now. For now, that has been what it's always been. Right? This has just been a podcast. It's just been our thoughts. That's all it's been. It's just been our thoughts, not yours, for whatever that day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.